Hello everyone, I hope you are all doing fantastic. Today we are going to have a look at the European energy markets for the week starting 9th of December 2024. My name is Marcello Kolax, I'm the Managing Director at Clever Markets and I'm walking you through the charts today. Okay, as always, we are starting with a little bit of a disclaimer. So everything that you are seeing here is just, in my humble opinion, it is not intended for trading advice. Let's have a look at the big market overview here. We are seeing that on the TTF, NBP front month, TTF and NBP front season, German power and EUAs, we have all peaked out across the markets. What is happening? So we are seeing that we have on the TTF and NBP, we do have a double top happening here. The TTF front month as well, double top. Here, yeah, probably a double top as well. And these patterns are all working with really clear neckline trigger levels. So if we start seeing a daily close below the necklines, and here we really need a daily close to rule out a false break, then we would see more significant declines. And I believe that this is what most of the market is looking at right now as well. On the German power markets, we see that we are already making lower lows and lower highs, so the bears are a little bit more advanced here. Same thing on the EUAs. Overall, we are pushing lower, we are making lower lows and lower highs as well. On the Brent market, we are still within a triangle, nothing has changed here, whereas the coal markets are simply crashing lower. There is more losses in the cards, I do believe that. The Henry Hub, we did start strong this morning already, we did gap higher, but these gaps are usually closed, so I wouldn't be surprised if we do get a gap fill towards $3 per MMBTU. Not Henry Hub, JKM not really doing anything. What we have seen all year is we do get a strong rise and then a little bit of a sideways move. Strong rise and then sideways move. So for now, the uptrend, the underlying uptrend is in place, absolutely. But I do want to see a push above the peak here, above the range, before we can start talking about bullish continuation. All right, let's have a look into the individual markets, shall we? I'm making myself a little bit smaller and we are starting with the TTF front month. So here we are seeing that on the weekly chart we are bullish within the channel. So that is unquestioned, absolutely. But we also see that we have a bearish engulfing candle pattern happening here. So bearish engulfing means that we gap higher or we open higher during the week with a new week, yeah, but overall we are just pushing lower, lower and lower. So that overall really, in this gap here is here 1 2 3 4, is it here 1 2 3 4 5, yeah, there you go. Here's the gap higher, right? That's this, but then overall just losses. So this is a sign for a down leg. Overall the trend and momentum tools are still bullish, which means that for now what we are seeing here could just be a downside correction in an underlying uptrend. But this downside correction is not traded on the weekly chart. That is best assessed on the daily and hourly chart. And here we do see the double top that I have mentioned in the intro. On the TTF front month, for example, we see that the neckline is at 45.86. And I want to see a daily close below that level before we can activate the downside target at 42.43. Interestingly, that level does coincide with a 61.8% FIB retracement. So it means many traders with many different trading styles, they're all looking at the same level. So I think the market, once we break lower, the market could be pulled towards that support level. That's why I also put my first target. Alternatively, if 45.86 holds, then there's a chance for us to simply push sideways for quite some time, and we will remain within that range of 45.86 and 49.55. So what is happening on the hourly chart? We do have a descending broadening wedge happening here, and descending broadening wedges are notoriously difficult to trade, and that is because the market is swinging in an increasingly broader range, with both sides being more and more convinced. And essentially that also means in this case we would be getting a bullish confirmation later and later, right? If we swing further, then the bullish confirmation would just come later, because price has to move a greater and greater distance before getting a bullish signal. So that's why we have to be careful. Our first upside signal would come above 46.73, and looking at the stochastic on the hourly chart, I think that's nothing too crazy. We might make it higher, but ultimately I still believe that we will remain within this descending channel, descending broadening wedge, and eventually continue lower. Not because there's any strong patterns or tools on the hourly chart, but simply because of the bearish setup on the daily chart. That's why. So ultimately below 45.86, very likely to push towards the 42.43. That is nothing too crazy, I believe. So one thing I really want to mention, I want to point out here, all the markets are set up for a decline, but we really must wait for it to actually materialize on the TTF, on the NBP as well, yeah. Other than that, we would otherwise we would be risking being caught up in a false break, so patience is advised. Do take a lead from the hourly chart, that will give us earlier signals. And here's the thing, most of the market is bearish, so the market sentiment is rather bearish. That also means if we fail to push lower swiftly today, a lot of the market will be very wrong very quickly, or a lot of the market might not be willing to wait out an extended sideways trend. So this in itself could be fairly interesting for the rest of the week. Okay, so everyone, this was it from me. Have a good start into the week. See you around, and bye bye.